think we're live.
Made me come to the office on Saturday.
Welcome,
I
sir.
can see you. I can see you're also in the office.
Yes, I am. I think we're live. Oh, B, are we live?
Yeah.
Yes. Okay, let me ask her.
I just sent her a message.
Okay.
Okay.
If we can use, if we have another phone,
Okay.
we
We
can use
can
that to
check.
check
Okay.
independently.
Okay.
If
Okay.
you have a separate, maybe a separate phone.
Okay. Yeah, we are live. Okay.
Okay. I think
Okay. What's the name of the YouTube channel? Let me see if I can go on the YouTube. What's the YouTube channel?
Tabitha Wakeme.
Okay, it's
Let
on.
me
You
share
are
you the
hosting it
link.
on your.
Yes, let me share you the link.
okay, good
Okay.
evening everyone. I think we can start now.
Mm,
Good evening everyone. I am absolutely thrilled to welcome you all to today's tax talks, and we're going to be talking about demystifying taxes. So I just want to know the number of people that are on here. You can just drop a comment if you're on. Just drop a comment. Let us know that you're live with us, and you can just introduce yourself and where you're joining in from. Let me know if you can hear me in the comment section. Okay, so my name is Blessing, and I am a corporate lawyer. I'll be your facilitator for today's conversation. I'll be guiding us through what we're going to be doing today. And so, yes, let's get right into it. So, today's talk is demystifying taxes. Most times, let's be honest, as business owners, when you hear the word tax, is it seems very stressful. It seems like okay, the government have they're after you and all of that. But tonight we have a seasoned tax person in our midst who is going to be breaking down these taxes. We're going to be seeing that there is nothing really in taxation. You're going to understand your tax obligations. You're going to understand what you're supposed to do and how not to accumulate penalties, how not to um, pay unnecessary penalties on taxes. So before we dive into what we have to do today, so we're going to just do something like a quick check-in on a scale of 1 to 10. How confident are you about your tax knowledge? So you are going to be dropping it in the chat, in the comments. Uh, let's see how confident you are about your tax knowledge. Okay, I can see a lot of people. They're already commenting in the comment section. They say we can hear you. Okay, that's good. Someone says theirs is one. Okay, that's good. That's good. That's why you are in this session tonight. That's good. Okay, someone says not so much. Okay, that's good. I can see Mohammed Obashola from Lagos. Thank you for joining in. Oh, wow. I see someone from Singapore. Wow, wow, wow. Thank you for joining in. I can see someone saying not so much. Okay, that's good. You are in luck because the people that we have in today's session, I mean, they are very wonderful people. And I'm sure before you leave this session, before the session is over, you will be confident, at least 6 to 7/10 of your tax knowledge. So quickly, first of all, I would be introducing our convener, and she's someone I'm super proud of, someone I have the privilege of having like a personal relationship with. She's my colleague and friend, and she's a seasoned lawyer, and also she's also an associate of the Chartered
Taxation.
Institute of Taxation of Nigeria. Yeah. And she's been in the business of helping business owners, guiding them through complex regulatory landscape. We all know that in Nigeria, we have a lot of regulations guiding businesses and all of that. So when you want to set up your business, there are a lot of things that you need to do. And if there is one person who can put you through everything that you need to do when it comes to setting up your business legally in Nigeria, is no other person than today's convener, and she is Mrs. Tabitha Uwakame. She is the founder of T Corporate Legal Advisory. Yes, and she's our convener for today's webinar. So, Mrs. Tabitha, can you just say hello to the people? Just wave at us.
Hi,
Let's see you are with
everybody.
us.
Good
Okay.
evening.
Yes. So we are very grateful to you for putting this very insightful session together. We really appreciate you. And then the next person I'm going to introduce is someone that is a seasoned tax expert. He's going to be our guest speaker for today. And his portfolio, in fact, I have to read out what I wrote down here. He's no other person but Mr. Adeni Bamboye. He's an award-winning dual qualified chartered accountant, and he's also a master's degree holder in financial management. He is a fellow of the Association of the Chartered Certified Accountant, that's ACCA, and that's ACCA of the United Kingdom, and he's also a member of the Institute of Chartered Accountants of Nigeria, ICSAN, and also Chartered Institute of Taxation of Nigeria, with over 2 decades of experience in finance, banking, tax advisory, and is also a partner of the Empyrean Professional Services. So, Mr. Adeni, can you just say hello to the people?
Hello,
Can you
people.
just wave at us?
I'm glad to be
We're
here, and
so glad and we're so privileged to have you on this talk today. I know that Mr. Adeni is someone that if you should bring him to talk on a session like this, he's someone that uh, he has so much knowledge, vast knowledge, and it's not so easy to get him to talk in a session like this. So we're super privileged, sir, to have you
Yes.
in our midst today, and we do not take this for granted. Thank you so much, Mr. Adeni. So,
Thank you.
quickly, I am going to bring on board the convener for today's meeting. She's going to be taking us through the overview because of the for the salvation of time. I will call her up quickly so that she can take us through the overview. But also, I want to get reactions from people, from those joining us. Please, can you just drop something in the comment section, just to our convener and the guest speaker? Just tell them welcome. I just want to get activities from you guys. You can drop emojis, whatever. Just follow us so that we can know that you are following on the chat. So, Mrs. Tabitha, we're happy to have you on board.
Okay. Okay, so thank you so much, Blessing, for the introduction. Thank you, Mr. Adeni, for gracing us. You're not easy to you're not someone that is easy to get. So we are grateful. We are honored. Thank you so much. We are humbled by your availability. Thank you, sir. Okay, so let me just get right into it. Thank you everyone for joining in. There will be no webinar if you did not decide to attend. So thank you for joining in. Okay, so there's one thing that working with businesses, I'm a business lawyer, and working with businesses has taught me that when it comes to compliance laws, The laws that is set, that are rules that are set that are to be obeyed, can either make or break a business. What do I mean? If you are setting up a business in Nigeria, there are rules that you must obey. Compliance is not something that you decide, I don't want to, it's mandatory. And these rules impact on how these businesses grow, how these businesses thrive, or businesses that would actually fold up. So that is the reason why we deemed it necessary to have such conversations like this, because we notice that tax is a very important aspect of compliance. There's no two ways about it. And quite a lot of people are not so aware about their obligations, their responsibility. They don't have clarity. That is the reason why this webinar was, you know, you know, came about, why it was necessary to come up with this webinar, so that we can begin to have conversations where business owners can actually understand their tax obligations, their responsibility, and actionable strategies, right? So that you can do things the right way. So let's get into the main thing. Today, I'm going to be talking about the importance of tax compliance for Nigerian businesses, how understanding taxes will help you avoid penalties and optimize business operation. Now, tax compliance, like I always say, I have worked with quite a number of businesses, and I see how people talk about sales, they talk about marketing, they sluggishly talk about legal, but tax. A lot of people have anxiety, especially small to medium scale businesses. The big guys, they don't have a problem. Bigger corporations, most times, they don't have a problem with compliance. But small scale businesses, larger and medium scale businesses, they contribute a whole lot to the growth of our economy. So it's important they are carried along, right? Now, why is tax compliance necessary? If you know what to do and when to do them, you save money, because as a registered business in Nigeria, you ought to comply with you ought to pay certain taxes at certain times, and failure to do that, you just begin to accumulate penalties. This interest will pile up, and if you register a business, it's not going away. This rule is there. It's a laid down rule by law. It's not something you can decide, oh, I don't want to comply, the government is not working, so I'm not going to pay my taxes. The moment you register a business, it's an undertaking that, yes, I'm going to be paying my taxes, I'm going to be filing my obligations. So when you get your compliance in time, you save money. Yes, I have assisted a lot of businesses, and we see how some of them pay a lot of money, millions of naira, that they could have easily saved if only they had paid in time, filed in time, and done what they ought to do at the right time. Now, another thing is, a tax compliance business is a trustworthy business. People who want to do business with you, people are comfortable to do business with you because they know that your records are in check. Another factor that would influence why you need to take tax compliance seriously is, you practically cannot do anything these days without tax clearance. That's just the truth. A lot of permits, a lot of compliance documentation. I can't even be specific. All across different industries, you would require a tax clearance certificate. And you can't get your tax clearance certificate if your records are not in order. So even if you continue to run, whenever you need a license and approval, you would meet your tax responsibilities waiting for you. Another thing is funding. A lot of businesses need funding. In fact, you need funding to scale your business. And the reason why you need to take your legal compliance, specifically taxes, seriously is because when it's time for funding, people are asking you for your books, 3 years tax clearance. They want to see your records for 3 years, a minimum. They want to see how compliant you have been. How have you been managing money? What records have you been keeping, and all that stuff. So you need to, as a business, take taxes and tax compliance, record keeping very seriously. Now, lastly, it improves financial management. If you know how to keep good records, if you know how to be compliant in time, you begin to save. You begin to save money. You're going to be, financially prudent, because you're not spending money unnecessarily where you ought to save them. So the topics that we're going to just do a general overview on, that will be fortunate to have the guest speaker speak on today. He's going to throw more light as to the taxes you are expected to pay if you have a company in Nigeria, when should you register for these taxes, when are you supposed to file, that is if you register a company today, when should you start filing your taxes, what are the ways you can actually file your taxes seamlessly without the hassle, without this fear, without this anxiety. Now, what are the ways you can legally reduce your tax burden? What can you do? What are the things you can do? What are the records you can keep? And how can you keep those records? What are the things you have to do? Basically, we go to school and they train us on various, our area of study. But most times, if you did not study business management, I can say for a fact that a lot of people did not go through training on how to keep records. A lot of us start businesses, but we don't have information or training on how to keep records, the records to keep, how to file, and all that stuff. We'll be going into them today. We'll also talk about how you can track your tax obligation. I mean, if you are here today, it means you're already curious about how you can be compliant with your taxes. So, in the areas of assessments, he's just going to throw light on it. Then practical tips on organizing financial records, structuring your tax record to attract funding, how investors, what are investors looking at when they come, what type of records do they want you to have kept, and all that stuff. We are grateful that we have someone who, not only is he very experienced, he's someone who believes in breaking down information in the simplest manner. We're not going to bamboozle you today with any technicalities. We are going to break it down in a very, very simple manner that will make it easy for you to understand. At the end of this webinar, you take home the fact that this is what you're to do. This is when you're to do them. These are the records that you're meant to keep. People who are sending their private income or private monies into their corporate account, I believe by the end of today that will stop, and so many others. So thank you so much for joining us today. I am humbled by the turnout. I am quite humbled by the interest, and I am excited about this webinar today. So that is it from my own end. That's my little introduction.
Okay, thank you very much, Barrister Tabitha. Thank you. Uh, that was such an important and power-packed introduction. I think from all that Barrister Tabitha has said now, we can see that tax compliance is not something that you can run away with, or you can run away from, rather. I beg your pardon. So she's mentioned the importance of tax compliance, and she's talked about tax compliance will help you to save money as a business owner. And we all know that for every business owner, you would want to save money. You also want to maximize your profits. You don't want to spend a lot of money paying penalties. You also you cannot do anything, like she has said, you cannot do anything practically in Nigeria without your tax compliance, without your tax clearance as a business owner. And she has also said that tax compliance will help you to access funding. Thank you so much. So if before now you've not been taking tax compliance seriously, I think from what she has said, you can see that it's a no-brainer. So before we move on, we need to talk about some housekeeping rules. So if you have any questions, there's going to be a Q&A session at the end of this season when I bring Mr. Denny on. So drop your questions in the comment section so that I can see them on time, and we'll address as much as we can address today. So if you have a question, do well to leave them in the comment section. And up next, we'll quickly bring on our guest speaker for today. Without further ado, let's welcome Mr. Adeni. Thank you so much, sir. It's such an honor to have you in our midst today. Over to you, Mr. Adeni.
Okay, thank you very much, madam. I'm so pleased to be here and to discuss tax, finance. I'll leave the legal aspect to the experts like you. I'm not a legal person, so let's shove that aside for now. I'm not a lawyer, so I'm an accountant. So I will be brief and I'll be sharp and straight as possible. You know, so for us to we for for every business, the best point of call, the first point of action is the structure of your business. I always tell my clients, my colleagues, my friends, or people that care to listen, I always tell them before you incorporate a business, what type of structure do I want to put in place? Because your business structure will determine your compliance level and your financial structure. So your business structure is like the foundation of whatever you want to do. And it will also serve as a navigator of how your tax structure will be like. So it's like someone trying to build a house. The business structure is like your foundation. So you have to for you to get that right, you have to understand it starts with while incorporating your business. And I know Tabitha being a legal and blessing being legal experts are experts in that area, so they can handle that perfectly. They can also provide. You must understand what you want to do. Okay, what type of business do I want to go into? What are the regulatory requirements? What are the things involved? What document do I need? So that will now once you determine that, it will also serve as an eye opener to how compliant you will be in terms of your taxes. I always tell people if you are starting small or you are a trading company, I always advise people to start a business name, an enterprise. They usually call it enterprise. So, for instance, maybe Adeni Enterprises. Instead of you, if someone who has a capital of say 100,000, you now want to let people. This is not the time to brag, or this is not the time to overbloat yourself. You know, being a limited liability company is not for everyone. So I always tell people start as a business name, because that itself has lesser legal. You won't bother yourself about company income tax. You won't bother yourself about the education tax, the police fund, and other subsidiary taxes. And you'll be bothered, especially apart from the VAT returns. You'll be bothered about your state inland revenue service. I mean your staff pay your staff personal income tax liability. So that is, for me, that's a very good starting point. You have to understand the structure of your business. Do you want to start as a small business owner? Do you want to start as a business, as a partnership? Do you want to start as a limited or an unlimited liability company? And if you are very big, you want to start as a PLC. So you must determine and this is not something you can decide by your own. You have to seek experts, either a financial expert or a legal expert, to be able to navigate this. So, like I said earlier, your business structure will determine your financial structure too. Because if you run an enterprise, you only need an audited account at the end of each year for internal use, for internal consumption. You are not even the CAC, the act does not, you are not under any compulsion to submit audited account if you run an enterprise or a business name. But if you run a limited liability company, you are expected at the end of each year to file your returns and to also prepare your do your tax computation and file with the LRS. So that itself, it's like I said, it's an angle we also have to look at. That's like your financial structure as well. And talking about record keeping, like I say, as I always tell people, record keeping is not a big deal. We are now in a digital age, and if you want to still remain in the paper age, it's still fine. Getting something as simple as this jotter for record keeping purpose is not bad. So far you are accurate about it and you are consistent. There is nothing wrong about that. So um, I also want to chip in this too about your commencement date. Your commencement date is not the same as the commencement date on your date of or your date of incorporation, as stated on your certificate of incorporation. The revenue, when I mean the revenue, the LRS, the FRS of this world, the Inland Revenue Service, will only what they usually use as the date of your commencement is the date you start your business and your the date money starts entering your bank account. The date money starts entering your bank account. That's the day of your commencement. So you have to take cognizance of that. We've talked about business structure, finance structure. We've talked about record keeping, and for record keeping too. It's you don't if you can't afford the cloud-based record keeping tools, you can as well use Excel. You can use your even WhatsApp. I always tell people you can use WhatsApp for record keeping. You can use WhatsApp to track your staff members, whether they are coming early or late. Although it requires some physical intervention once in a while. If someone said they came into the office they've clocked in 8 a.m. Or you can call the other person to verify if that person physically uh, in the office. So these are record keeping tools. So you don't have to if you can't afford it doesn't mean you can't use the basic ones that we have right now. So I think I will leave that for now and allow Tabitha to throw more questions, and so I don't take much of our time. Thank you very much.
Okay. Okay.
Um, you talked about structures. I think from what you have said, you've said that first of all you need to determine the best suitable structure for your business. So you don't just
Yes.
start by setting up a business and you say, oh, I just want to do a limited liability company. Probably your friend is doing a business and he registered a limited liability company, so you want to do the same, but you're not doing the same business. So, these are the little things that would affect your tax liabilities. So, from what Mr. Denny has said, the first thing you need to do is to determine what works for your business. And that will mean that you would need to talk to someone who is a corporate lawyer or someone who can guide you and tell you the tax benefits of each of the structures, and you determine which works for you. Should you do a partnership? Should you do a sole proprietorship? Do you know that there are some businesses that business name is best suited for? For instance, if you run a consultancy business, you need you business name is best because of the inflow that will come in. By the
Yeah.
time they tax that, you will not be able to pay. So do you see how choosing a wrong structure can affect your tax liability? So um Barrister Tabitha, from a legal perspective, we want you to throw more light
Okay.
on the legal structures and um how you can guide how you can be guided in choosing the best suited legal structure.
Okay. Thank you, everyone. Thank you, Mr. Denny. Okay, so from a lawyer's standpoint, right? If you want to set up a business, Mr. Denny actually got the ball rolling. The first thing you're going to ask is, how much capital do I have? That's where we're going to start from. Then the second thing, what specific business do I want to go into? Now, and am I doing this? Am I starting this business alone? Do I have partners? All these factors will actually influence the structure you go for. Considering the capital you go for, a small scale business, a business that you do not have enough funding. When I mean small scale, let's just say a petty store, you know, a small POS shop, a cash business that is quite dealing with the little monies here and there. You don't have any business with a limited liability company based on the capital that you have. You have a capital of 100,000, 150, 200. Why? Because every single time you register a company, like Mr. Denny has said, there are obligations that are expected of companies that are not expected of business names. A company, you pay company income tax, you pay value added tax, you pay withholding tax. I'm not going to delve into taxes. That's for Mr. Denny. But there are these legal obligations expected of a limited liability company that is not expected of a business name. A business name, you're expected, you can't run away from VAT anyway. You still file your VAT if it's a vatable business. Then you do your state's internal revenue. It's Abuja FCT IRS, if it's Imo State, whatever is called, the state tax board, you are going to be remitting your personal income tax to the state and then VAT as applicable. So if for the second point, if you are going to deal with there are certain businesses that unfortunately cannot be registered as a business name. That's the truth. No matter how little you feel like you're starting, if you want to do something that has to do with finance related, want to do clearing and forwarding, you want to do aviation, you want to do let's say, I'm just talking about the legal businesses that have legal restrictions that you cannot register as a business name. Schools, more recently now, CAC made it impossible to register a school as a business name. You must register it as a company. There's so many other types of businesses that you cannot register as a business name, no matter how small scale that business is. So if you find out that yes, your capital is small, but the type of business that you have a burning passion for is a business that is there's a laid down regulation on it, there is no way you would register it as a business name. So you can now see how legal structure can actually influence the tax obligations, because what you register as will influence what you are meant to pay, when you are to pay, and all that stuff. So the next thing is partnership. Certain businesses you are starting, I'm going to give you a reason why legally business limited liability will always be a better option. But we always in law we always say that there is an exception to the rule, because in as much as we say yes, legal business limited liability will protect you, but as a small scale business, you're trying to still get life up, you're still trying to still get things up. At that point, it's survival, right? So if you're starting business with people, partners, I would always recommend a limited liability because of the legal benefits that are available to uh, limited liability. So for the tax man, we might agree to disagree on this, because the tax man will always tell you it's a business name, always. Because, but from a lawyer's perspective, yes, a limited liability would be necessary for some businesses. Legal limited liability has what we call legal personality. It separates you from your business. Your assets are protected. Your assets are shield. Your assets are like there's a shield from you and your assets and you're going into partnership. You're not the only person involved in that business. There are risks involved in that business. That's why a limited liability is always a better option. Limited liability is also a structure of business that is recommended for most advanced businesses. I say advanced businesses that have sufficient capital, businesses that are also restricted. You see why government says if you want to do clearing and forwarding, you must do a company. If you want to do a school, you must do a company. If you want to do something aviation related, you must be a company. Consulting. Okay, well, no. For consulting is quite tricky. Some consulting businesses must be registered as business name. For example, you're a professional services, tax, law. Honestly speaking, if you talk to the tax man, thank God we have him here. You have no business registering a limited liability company for such businesses, because most of the money is coming into the system. It's not yours. So it just
They are
creates
not
a
your
lot.
money.
Right? So it creates a lot more work for you, even if you register such legally. So you see how these things are quite interwoven. But from a lawyer standpoint, you check your capital, you check the type of business you want to go into, you check the partnership. What are you going for? What is the aim? What is the goal of this business? What do you want to achieve with this business? Where do you see this business? So everyone, if you're consulting your lawyer or your auditor or your financial advisor, you have to tell them the truth. There's no pretending, there's no forming, because they will advise you based on the information you provide. It's garbage in, garbage out. So if you tell us that you have a lot of funding, you have this, you have that, that's okay, right? So in the terms of protecting your assets, you register your companies, own your properties in the name of your companies. Those are legal things that the restrictions for business names, they are quite unique. So if you check it from this angle and you have successfully decided that okay, it's a business name or it's a company, then whatever the obligations are, you prepare yourself for it. But like he said if it's a small scale business, a trading business, a consulting firm, please go for a business name. Now, if for a business that you feel like you have vision, a business that is in the restricted category, a business that you have partners, please go for a limited liability. So thank you.
Thank you very much, Barrister Tabitha. I think from a lawyer's standpoint, you can see that there is no hard and fast rule about these things. You just need to, consult an expert when you want to start. Let them know what you want to do, and they will guide you and advise you properly. So, moving on, I think Mr. Denny mentioned something on record keeping, but we will we will talk about that more when we are talking about tax planning and how to minimize tax liabilities, right? So right now, we'll be moving straight into the type of taxes that we have, right? Mr. Denny, can you take us through the types of tax obligations that business owners have, and the depending on the type of business structure they have and the taxes they are expected to pay, their tax obligations.
Okay. I would focus. Thank you very much, Barrister Blessing.
Yeah,
And I
thank you,
would
sir.
like to focus more on the major ones because there are
Okay, sir.
as we speak in Nigeria, we have over 56 different taxes. Yes, but the based on the new national tax bill, the government is trying to through the presidential tax committee, and they are trying to streamline it to something to a manageable limit. So we have a lot of taxes, and we have a lot of taxes and levies. Some of these, but to a business owner, that because this is an outflow, it's an outflow to every business, and they see it as taxes. If you start analyzing that this is not taxes, these are levies, they will tell you flowing grammar. So I would like to focus on the most important ones. For example, company income tax.
Company income
To
tax.
make it simplify it, if you are like I said earlier, if you are a business, if your company is registered as an enterprise or a business name, you have no business paying company income taxes. That is settled. But if your company is registered as a limited liability company, you will pay company income tax. Okay, if your business, we have three categories. If your
Mm,
business is below 25 million, we'll get that. We'll analyze that when we get to VAT filing too. But if your business is below 100 million, your annual turnover is below 100 million, pay 20% CIT, company income tax. Let me repeat. If your business turnover means revenue, sales, because we have a lot of terminologies. Income, revenue, sales, anything you want, proceeds, anything you call it, is below 100, you pay 20% of that as company income tax. Anything above that, you pay 30%. That is the current situation in Nigeria right now. And in addition to that, we have what is called the education tax. If your company is registered as a business name or as an enterprise, you have no business with education tax. You have no business paying education tax. But the current rate of education tax, the current rate is 3% right now. We have other taxes goes along with the company income tax payment, the police levy, like two other ones like that goes along, but they are not as much as the police levy is 0.5% of your accessible profit or so. I don't have that at the top of my head right now. So from there we move to VAT. And if you want to, if for VAT filing, after registering your business, either as a business name or as a limited liability company, the next thing you need to do is to get your TIN. tax identification number. I learned that I know that the CAC, for most companies, their team comes with the CAC because CAC now works in collaboration with the FRS. But that doesn't stop you from registering with the FRS, because if you don't register your account, especially I think Barrister Tabitha can talk more about that later. Especially for companies that needs a NAFDAC license, there is a way they sync it. So if your company is not registered with the CAC, it's not registered with the LRS after you've gotten your incorporation document and everything, you might find it difficult to do some activities, or to get some approval or some compliance, to scale off, so to scale through some compliance hurdles. So that is that, as regards your registration. You have to do your team registration, you have to do your VAT registration. Most times they go hand in hand. So for VAT, you have to check whether, in addition to, you can even do that before registering your business. What I want to do, is my activity vatable? For instance, in Nigeria, water is not vatable. Water is not vatable. Although it's the case, I don't know whether they resolved. They said so far as packaged water, they ought to they ought to add something to it. Water is an essential commodity, and for now, those selling water is not vatable. But if you go to Chicken Republic, for instance, in Lagos, I'm speaking from Lagos. If you buy a meat pie of jollof rice worth 4,000 or 3,000, they will charge you they will charge you VAT, which goes to the federal government. They will also charge you consumption tax, which goes to the state government. So a lot of, although most VAT is a form of consumption tax, but I think it's an issue of law, and each state sees it as the law creating that both taxes are quite ambiguous. So each unit of government is trying to exploit the loopholes in the law. I think the lawyers in the house can put this better, but the case is still in court. But if even if the last time I was in Port Harcourt, I saw something similar. In addition to the VAT, you have to, so either you are registered as a business name, or a limited liability company, you must fulfill your VAT obligations. And how do we do that? You must understand, because VAT is very complex. We have what we call input VAT and output VAT. I wouldn't want to bore you with that, but just know that for what your goods or services are vatable, you must file, or you must pay your VAT, you must file. And there's a difference between paying VAT and filing VAT. If you pay your VAT for schools now, school educational activities are not vatable. So there is a list for all those activities, all those and services in the VAT Act that states those services or those that are vatable. So if you run a school, you have no business paying that, except you run a business aside that is generating profits, or activities that are vatable in nature. That's where they can say you are paying. But if you run a school, you don't have business paying VAT. So that's um, that's that. We also have payee, personal income tax. If you run a business name, it is expected that as you grow bigger, you have staff members that works for you. And if those staff members works for you, you must pay them monthly salary, irrespective of your size, irrespective whether you've exceed the 25 million threshold or not. You must pay your staff salaries. And after paying your staff salary, you must deduct their taxes, the personal income, the payee, personal income tax element, and remit to the government within the 10th of the following month. That is what the law says. So the to same applies for those who run company income taxes, even partnerships too. The only exemption to this are the sole proprietors. of those business names. So you are expected to file your returns. If you are a sole proprietor, you are expected to file your return and pay once a year. That's the 30th of the following month. But for your staff members working for you, earning salary on a monthly basis, you are expected to pay you pay and remit their taxes every month. And if you deduct their salary and you don't remit, it's an offense. If you charge your consumers and customers VAT and you don't remit, it's an offense. Based on my experience, on what on my little years of working as a tax consultant, the government, the tax authority, especially FRS, they can be lenient with you with company income tax. They can be lenient with you with the EDT. They can be lenient with you with other taxes, but they have the VAT. If they can establish that you've collected you've collected VAT, you've charged your clients, your customer, VAT on the goods or services you've rendered to them, and you fail to remit, they won't take it lightly with you. They won't even negotiate with you. And the way the tax system works now, everything is digital. And if you fail to comply and they log it on their system, they call it tax promo, they log it, it will keep reading on a daily basis. And at the end of the day, the tax liability might be humongous and might be something you might not be able to pay. So it's better to get it right at the beginning and understand all these little things so we don't fall into that trap. Let me rest my mouth for now and allow the barristers to take over. Thank
Thank you so much, Mr. Denny. Thank you, thank you, thank you. I think that this is so insightful. This session is so insightful. So now we are seeing that there's a difference between company income tax, payee, personal income tax, VAT, and education tax. Like Mr. Denny said, there are a lot of taxes. We have petroleum tax, withholding tax. He said, but these ones that he has mentioned are the important ones that you need to pay attention to. And there was one recurring thing that he kept saying, which is about value added tax. Value added tax. So this is one of one tax that applies whether you're running a business name or a limited liability company partnership. So long as your activities are vatable activities, you need to pay value added tax. And these taxes are paid monthly, remitted monthly. So, but Mr. Denny, you mentioned something about tax filing and um paying of taxes. I think you should throw more light on that because a lot of times, especially when it comes to the company income tax, there are three thresholds, like you have mentioned earlier, for company income tax. And if you're making below, if your annual turnover is less than 25 million, you have zero tax liabilities, right? I think I'm correct on that.
you. Yes,
And
correct.
also, that means zero tax liabilities, right? You don't have to pay any taxes. And then there are also times that you see people say they are not doing business. They just have registered their business. Business has not been so good. We've not been doing business. And they're surprised that we're talking about filing of taxes. So I think probably you should throw more light on the difference between filing and paying of taxes.
Okay. As I said, thank you very much, Barrister Blessing. As I said earlier, it's there's a difference between paying and filing. Even the tax authority, even the government knows that you can't tax, you can't pay tax on zero profit. There must be profit for you to be able to pay tax.
Okay.
But that doesn't exempt you from filing. If
Okay.
you run, I always tell my people, my friends and colleagues and people that I interact with, even though you've not commenced business, resist the urge to allow funds that are not related to your business enter your business account, because
Very
there is no way
important.
you can defend that, because every inflow and outflow into your bank statement has a tax effect.
Very true.
Every inflow and outflow into your business bank, corporate bank account, has a tax effect. So always resist the temptation. If you know you can't defend any amount that goes into your bank account, or business bank account. You can do anything with your personal account. But your corporate bank account, if you know you can't defend it, don't use your personal account, your corporate account to receive funds that are not related to your business. It will haunt you at the end of the day. Secondly, for businesses that are not yet operational, there is what you that doesn't stop you from filing. In addition to filing with the FRS, you are supposed to file with the CAC. You are expected to file with the CAC, and you must file with the FRS even though you've not started operation. Yeah, and if you, even though you can even apply for your tax clearance certificate, which we usually call NIL TCC, and you prepare what is called statement of affairs that will show that okay, this business has commenced, but we are not yet operational. Like I said, I posted something earlier today. It's on my WhatsApp and on our on all our social media platforms. That your the dates on the commencement date uh, on your CAC document is not the same as the date you actually commence business, the day you started operation. They are two different things. And in most cases, how do we determine the date of your commencement? Is your bank statement. So what they, if you are arguing, if you are telling the revenue guys, the FRS guys, you've not started business, they have the software. They have a way of tracking whether your business is running or not. They'll just tell you, okay, on so you date, you open an account with GT, you have an account with they have a way of tracking it. And let's not forget that we are in a BVN era. If they type your BVN now into their software, they will bring out all the linked accounts to it. So nowadays there is no hiding place. There is no hiding place, especially for those that are running a limited liability company. Like I said, for company running a business name, you have no business with the FIS except for your VAT filing. Because running a business name doesn't mean you won't file for VAT. Because they have a way of tracking that. So if you charge your customer for VAT and you don't file it, they will come for you. So that is that. So I'm available for more questions. Thank you.
Thank you very much, Mr. Denny. Someone says, thank you, Mr. Denny, learning a lot from this webinar. Thank you, thank you, thank you. Please, I'm seeing just one question. Please, if you have a question, there's going to be a Q&A session where we'll address all of your questions. So please leave the questions in the comments and I will see all comments and Mr. Denny is going to respond to your questions. And if you have personal personal questions that you want to ask, you can reach out to you can reach out to the speaker or you can reach out to Barrister Tabitha for further inquiries. But for now, leave your questions in the comment sections and we'll attend to them. So briefly, Barrister Tabitha, can you talk about the implication of tax penalties? Because one of the things that you mentioned when you were speaking earlier in your experience working with a lot of business owners is penalties on accumulated or late filing and all of that stuff. So can you throw more light on that? How do businesses accumulate these penalties and what can be done to avoid this, especially for businesses that are not making so much profit, and how can they minimize their or tax how can they avoid accumulating tax penalties? I think you get my question.
Yes, I understand. Okay.
Yes.
So like Mr. Denny said before, when you start your business and you indicate that you have commenced business, in fact, even if you do not indicate and that money is just coming in and out of your account, you have actually commenced business. So there are taxes you ought to file. If it's your VAT, it will be monthly. If it's a company income tax, it's going to be yearly. Your withholding tax, they all go one in, like they go as the same package. Your withholding, your company income tax, education levy, they all go for like a yearly filing, a yearly payment and filing stuff, while your VAT is a monthly filing system. So the first thing is that when you fail to file these taxes when you need to file, and we are making emphasis on filing, not paying, because I have observed in my experience, I see a lot of people who maybe they don't have so much transaction, they have 7 million, 15 million through the account. They will tell you, yeah, but my account is less than 25 million now. So where is this penalty coming from? Just because you did not file when you were meant to file, you are attracting penalties for late filing. They call it late returns penalty. Mr. Adeni, this is his field. I don't want to go into that his area. But from a legal standpoint, because the law has said this is what you ought to do, this is when you ought to do them, failure to do those things, it's automatic. Those filing fees or these late filing fees begin to apply, and not necessarily taxes. I think I've seen a lot of people who have late returns filings for their VAT, have late returns filings for CIT, but they have commenced business, but they did not file, and they attract late returns filings. Although, if we're being honest, it's not as much as when you are filing and you're not remitting your taxes. But an area I know that is usually a problematic area is the VAT. People are not filing their VAT returns. They are doing business 6 years, 7 years. They are not filing their VAT returns, and they are accumulating penalty. So as a business, you need to, at the end of this webinar, you go and write down, oh, this is when I need to start filing. Oh, this is what I need to be doing. This is when I need to renew. I need to renew by so date. I need to pay my tax or file by so date. If you don't file it, those penalties will just be adding up. Now, for a business that have commenced, you are making money, you're making 120 million a year. And don't, the threshold is to revenue. Now, the threshold is not as to profit. The metric for which the tax system says you will file is as to the revenue. So if 120 million has passed through your account, there's no excuse. When you now sit with the tax man, then they can now be bringing out your profits as applicable. But because you have passed those thresholds, or because you are in the tax net, because this is the obligations the law has said you are to comply with, you ought to comply with it. Other than that, let me give a practical example. Is there something we do in Nigeria that when you don't do them, the penalties will accrue? I think it's only taxes that I can think of. When you don't file on time, the taxes will come. When you don't apply in time, the taxes will come. Or sometimes you have something where you apply, you do not make an application when you need to make those applications. Just because of that, the filing fees will apply. So every small business not making enough money is not the reason you shouldn't file. Not making profit is not the excuse not to file. Filing is irrespective of profitability, irrespective of the fact that you're making enough money. Once your business is running, you need to be filing. So yes.
Thank you very much, Barrister Tabitha. I think we're learning a lot from today's session. We've learned that filing is not the same thing as paying of taxes. So, regardless whether you think you're making profit or whether you think you have taxes to pay or not, you need to file, right? So what filing simply means is that you are saying, okay, these are my records for the last financial year, and I didn't make profits, so I don't have taxes for you people. Simply put, so but you have to make them see your transactions and see that, okay, you don't have taxes for this year. So one of the misconceptions that business owners have is the fact that they just assume that they don't have taxes to pay. So, regardless, you are learning today that even if you don't have taxes to pay, you need to file. Another misconception is that what are people doing with our taxes? That does not concern you. As long as you're a business owner in Nigeria, you need to file and pay your taxes as and when due. I am seeing a lot of questions here. Some people are asking personal questions. If you have some questions that personally relates to your business, I think you can reach out to any of them, Barrister Dini. They will, the email address where you can forward your inquiries will be on the display, and so please drop your questions in the comment section. We are moving quickly to the question and answer session. But before that, Mr. Denny, any final thoughts? Any final thoughts, final things you want to talk about before we move straight into the question and answer?
Okay, I will be talking because we'll be talking about taxes later. I want to delve into finance, because finance and accounts, because without, I always tell my mentees that you can't be a solid or quality tax man without a very strong sound knowledge of accounting. So it's in our field, you see that most times, most accountants, the most good sound tax practitioner that you see are mostly um, chartered accountants, because they are most, and they have very strong knowledge of it's, as a business owner, you can't detach accounting. I established about telling that that you can't just tell them by word of mouth that you do. You must be able to show work. You must be able to show that this is our profit and loss, this is our balance sheet, this is our financial, these are financial records over the years, just to show that you didn't actually. You can't just be writing them back and forth. And if you keep writing them, they'll just do BOJ. They call it best of judgment, and just slam you the liability they want. So you can't detach accounting and finance from from your business. So as you are thinking about tax, be thinking about accounting, be thinking about record keeping. And another thing I also want people to take home today, we call something warrant test. Any expenses that you incur must go in line with the warrant test. What does the warrant test mean? Warrant test means for you to incur any expenses, those expenses must be wholly, reasonably, expressly, and necessarily incurred for the business. What this means in summary is that you can't just go to the nightclub and spend money there from your corporate account and charge it to the company. At the end of the year, when the tax man comes and checks your books, he will add it back and slam you 33% on it, because those expenses were not wholly reasonably and explicitly and necessarily incurred for the business. So any business, any expenses you want to incur on behalf of your business, you must ensure that you can tie it to the business, and you must keep records. You must ensure you keep records. So that is by the side. So going fully into finance, you must ensure that if you are a small business, try as much as possible to avoid borrowing. I'm not saying borrowing is good, although we know we have good debt, we have bad debt. But if you are starting, try as much as possible to use your personal funds, especially if you are running a small business, so that you don't put yourself under undue pressure. Although interest payment, in the interest you pay on those loans are tax deductible, you can use it to reduce your tax. But as a small business owner, running your own business comes with peace of mind. You know, always ensure you put your cash to work. Always maintain your cash wisely. Be frugal with your expenses. Don't overbloat expenses, and always ensure that there's a difference between cash and profit. Profit is separate. Cash is separate. They are two different things. Okay, for instance, let me use this phone for example. If I if I sell this phone now for 500 naira, if I so as I if I sold this phone now for 500 naira, and you pay me cash of that 500 naira. Yes, I've made sales and I have cash. I will record it that I have cash of 500 naira and I also have the cash of 500 naira. And maybe the cost of buying this phone is say 300 naira. I have a profit of 200 naira. But can I say I have the cash of 200 naira? Yes, I have it because the cash is with me. But if I bought this on credit, if I sold it on credit, yes, on my books I will say I have a revenue or I've made a sale of 500 naira. But you only paid me maybe 250 out of it. You can't say you have sales of you can't say you have a cash of 500 because um, you've already sold on credit and the other 250 is hanging somewhere. So business owners should know the difference between sales, profit, and cash. You should be able to distinguish that. So and learning basic accounting won't hurt anybody. We are not saying you should be a financial expert, but learn accounts and tax to an extent that even when you employ an accountant and your accountant is telling you something, you should be able to ask questions. But why is our revenue moving from why is our revenue moving from 50 million? Why is our revenue reduced from 40 million to 30 million this month? I guess we made a profit. We sold so. It ought to increase. Why is our cost increasing? Why? We didn't employ anybody. We didn't buy more product. You should be able to ask those questions. We should try as much as possible to increase, sharpen our literacy knowledge. You know, enroll for trainings like this. Do one-on-one consultation, even on legal matters, with people like Barrister Tabitha and Barrister Blessing. So that you don't shoot blind. So, but you be on guard, and when it's time for you to maybe settle your tax obligation, or even because these things go a long way to in attracting investors. Because if you want to invite investors into your business, they will look at your track record. Those are the things they look forward to before giving you grants or giving you loans. But if you go to the bank now and say you want a loan, they'll tell you to bring your records, your financial records. And if you don't have them, they won't trust you, they won't give it to you. So I want us to sharpen to be financially more literate and to appreciate that accounting, tax, legal issues are very critical issues, are critical factors to the success of every business. Don't joke with your legal advice. Even if you can't pay a lawyer, have them as friends so that when you can be so that when you have it, you can just by the time you tap from Barrister Blessing and Barrister Tabitha, you have an idea of what to do. So that you don't so I have an accountant as a friend, I have a taxman as a friend, I have lawyers as a friend, so that you know what you know that at least you have people you can fall back to at the end of the day. Thank you very much. I'm open for more questions.
Thank you so much, Mr. Denny. Thank you. At least if you're not like if there was anything you picked from this session, Mr. Denny says that even if you can't pay a lawyer, have them as friends. I think same goes for accountants too. If you can't pay an accountant, have them as friends. You can ask them a quick one. Let me. I get that a lot. People say a quick one, and then they begin to ask you, plenty, plenty questions. Okay, so thank you so much. This has been a very insightful session. Even for me, I've learned quite a lot in this session. So we'll be going straight into the question and answer. I have a lot of questions here, but because of time, we may not be able to take all of these questions, but we'll try as much as possible to do the most that we can with the time that we have. So, first of all, Mr. Denny, when you were talking about finances, you talked about financial records. I want you to talk. There's a question: what are deductible expenses that can help business owners reduce their tax liabilities?
Okay. Thank you very much. That's a very smart and intelligent question. Like I said earlier, I mentioned Warren rule in tax. You must follow. Everybody can apply this. Ensure that any expense you want to incur is wholly, reasonably, exclusively, and necessarily incurred for the sake of that business. So all
Business.
those expenses are deductible. Even if you want to, like when I remember reviewing an account just few days ago, and I noticed the client included tithes, deducted tithes from the business name to the from the business account to the church. You and I know that the taxman, when they see that, they will add it back. It's not
Yeah,
deductible. But if you
yeah,
get a loan from the bank, and if you get a loan from the bank, loan is tax deductible. So far you can provide them with the loan
yeah.
document, the loan
Mm,
agreement, and the schedule. They will let it go. So every expense you want to incur, you must ensure that they are wholly, reasonably, exclusively, and necessarily incurred for the income generation into the business. Have it at the back of your mind that if you can prove that without incurring those expenses, you won't earn revenue.
wow.
Okay, for instance, I'm in my office. If I don't pay for electricity, I won't be able to speak conveniently this way. So if I add electricity to our business expenses, no taxman can flout it or can add it back or can object to it. Just like the cost of acquiring this laptop, the cost of phones, even though Madam Barrister Tabitha and Blessing, they are looking beautiful. I don't know if they will allow the cost of makeup and your expensive hair to.
Yes, it's a business expense.
So you have to prove that beyond reasonable doubt. So things like that. I can see lots of books behind the Barrister Tabitha. Those things
Yeah,
are
yeah. Mm,
they are business expenses that we need. So anytime that's why record keeping is very important.
very
Any
important. Yeah.
business we incur in the course of the business must be recorded. So by the time you are preparing your account, add it to the expenses so that you can reduce your tax liability. If you buy a car as a business owner, if you buy a car, don't record the car in your name.
Oh, wow.
Ah,
Mm.
Let me tell you one secret. Me, I bought one car in one small car. So Toyota is just like Ijapa, like small car like that. I bought it in January. When I bought it in the name of our firm,
Mm, mm, mm.
not in my name. So things like that, these are ways you can reduce your tax liability. So if you do that, you claim what is called capital allowance. You can use that to reduce your tax liabilities. You
Thank you
can
very
use that to
much.
reduce it. Thank you.
Yeah, thank you very much. This is so clear, and I think it's so clear. No need to waste more time on that. So someone is asking, I think Omolayo Olorunshola, she's saying that. So, are we supposed to file nil returns, especially for business that are only registered but are not doing business?
Yes, you are supposed to file new returns. And like I said earlier, you are supposed to do what is called you prepare statement of affairs. Especially this applies to only limited liability companies. Oh. If you are a business name, all you need to do is to file with the CAC and limit. You have to file. But if you are a limited liability, if you are a business name, you have no business with FRS. So you are expected to file your nil returns. Even if you want a tax clearance as a limited liability company, they will give you only that it will be nil and it won't show your figures. It won't show your. So it is within your right to file because if you don't file, the penalty will keep on accruing.
Thank you very much. I think it was part of the things that we talked earlier, but thank you for the clarity. I think let me address this to Barista Tabita. Somebody is asking, um, what's the difference between limited liability company and enterprise? Just
I think
briefly, what's the difference?
Sarita will answer that one.
Yes, I addressed it to her. Yes.
Okay, so a business name is a business, an entity where you are operating as yourself. That is Tabitha doing business as Tabitha Enterprises or
Yeah.
Tabitha Ventures or Tabitha and Co. or Tabitha if I want to just do business as Tabitha. Although CAC may not approve a name like that anymore. So for a company, you're doing business, you are trading as a limited liability company. It's no longer you, the person now. Your structure assumes its own personality. You separated yourself from the business begins to operate. So basically, these are the core differences between a business name and a company. A business name is you, the owner, the proprietor, trading as whatever name you call yourself. So for a company, you have registered an entity that you're going to be operating or doing business with that is separate from you. That is the reason why we say, oh, that person, he died, but the business is still going on because the company continues to live on as long as they are fulfilling their legal obligations. But in most cases, once a proprietor, that's the owner of a business name, dies, that business dies with it, right? Because in a company, you have shares in a company, there are directors. The people who are directors, officers of the company, they don't necessarily have to be the owner of the company. So in the absence of the owner of the company, the business continues to run. So business name, also known as a small scale business, also known as ventures, also known as sole proprietor, you are doing business in your own person, operating with the name or under the name or trading under any name that pleases you, as long as it doesn't have limited liability and company. While a company is an entity distinct that has the legal capacity to enter into contracts, capacity to buy a property, capacity to shield the assets of the owner from the business. So yeah.
Thank you very much, Barista Tabitha. I think that was very apt. So we now know the difference between limited liability company and enterprise. The second, a follow-up question there says, what business are not vatable? I don't know, Mr. Denny, do you want to
That
answer
one,
that?
let me
Mr.
give
I
you.
Dennis.
feel
Let me
like,
let me
yeah. Mm,
let me give you. I said it earlier. Maybe
mm,
you were not in then. There are some businesses that are not vatable. Schools are not vatable. Hospitals are not vatable. Um,
Baby
so
foods,
many
baby
of them.
things.
Baby things, educational content. Okay, for instance, you go to, like I said, we go to Mr. Biggs or Chicken Republic. If you buy anything there, they will charge you VAT.
mm,
But if you pay for your school fees at LBS, they will charge you VAT. So that's why you know business that are vatable or the ones that are not vatable.
mm.
You know. So there are so many of them. If you fly an aircraft, it's not vatable now. I don't think you see VAT in while flying
Mm.
an aircraft. Yes. So yeah, thank you
So I
very
think
much.
the list goes on and on, is
There's
inexhaustive.
a list.
I think,
There's a
yeah.
list.
Mm.
There's a list for that. I
So,
can't remember the VAT
yeah.
Act.
It goes on and on. So someone also says, what's the difference between withholding tax and VAT?
Okay. Yeah, withholding VAT is a form of is a consumption tax that you pay, that you charge on goods or services that you've consumed. While a withholding tax is not a separate tax. Oh. It's not a tax
Okay.
on it. It's a form of company income tax. It's an advance payment of company income tax. That's why you will never see tax taxman will not say withholding tax is a separate tax. It's an advance payment for company income tax. So the essence of withholding tax is to bring government, it's to bring taxpayers into the government's net. Okay, you're expected to pay 100 million as taxes, but the government by its way of you know by its way of its operations and how they trap people or track their activities, they've collected maybe 20 million from you by way of withholding because you deduct their source. So at the end of the year, after your audit or when you want to pay your taxes, you can use the withholding tax that has been deducted in advance to offset your your tax liability, your company income tax liability. So withholding tax is not a separate tax; it's a
Okay.
form of company income tax. That is that. So that's the
Okay.
difference.
All right. Thank you very much, sir. I think that is well understood. I have some questions here. I'm going to be taking some questions together because I feel like by answering
Someone is
that
asking
you
for
also
my name. You can send me an email.
Yeah, it's on the
okay.
screen.
Mm. Okay, so someone is saying that is logistics business taxable? That's one question. Then the second question is there a particular office where we can walk in and file everything? That's another question. And then third question, are there government portals where we can do these filings without having to go into any office? So I think we can take those three questions together. First, is
Yes,
logistic business taxable?
yes. Logistic business is valuable.
Mm, okay.
The only caveat is that if you are running international logistics, that one is not valuable. But if you are running, because logistics is very wide. We have inventory management, we have wholesaling, we have different types of, even all this keke is a form of logistics. Courier service is a logistics service. So all those activities are vatable. So they are vatable. It's not, you can't,
All right. Thank you
it's
very
not
much,
on
sir.
it's
So
not on the exemption list.
mm, so there are questions on if there is a particular office where we can walk in and file everything, or if there are
Okay, there
government
is a
portals where we can do the filing without going into any physical office.
before you file, I always say you must
Mm.
get your the account right. And now, gone are the days you can do that for FRS, all the revenue authorities, both federal and state, they all have their online presence where you can file online. You don't have to physically go to their office. You don't have to, but you need to sit with an accountant or a consultant before you can put forward those records so that it will make sense. So you don't even shoot yourself. So it's not something I wouldn't say you can't do it yourself, but it's something you need to look at critically before you file. Because once you file those things or those transactions, it will be very difficult to recoup. And at the point, I
Okay.
remember when time we want to file, want to click on anything on tax romance, the tax woman will ask you, "Are you sure this thing is correct? You lawyers knows what I'm talking about. That so that are you sure of what you are clicking? Is it correct? Because by the time you click it in, you lock it in, it will be very difficult for you to reverse. So you don't mess everything up. You need to talk to
So there's a
people.
question here. Thank you very much, Mr. Denny. I think that's well understood too. There's a question here. I think it's like three in one. So the first thing is how is filing done? I think we have taken care of that. You just mentioned that now. And then the next question says, when you say no tax for revenue below 25 million, is this only applicable to business name? There's a confusion there. Does this mean no VAT too? And then how does tax pro max work and what is it for?
Okay. Okay, I said this earlier. If you are a business, this applies to both business name and limited. If you are a business name and your business is below 25 million, you have no, even if it's 100 million, even if it's 200 million, you have no business filing with the tax authority. But the only issue you will have with the tax authority is when you file VAT and you are not remitting. That's where you have problem with them. And they notice that you've been filing for VAT and you are not remitting. But for limited liability companies, if your revenue is below 25 million, you have to start filing. And that's when I said 20% comes comes in, your 20% as against the 30%. The 30% you'll be paying when your revenue exceeds 100 million. So that's that. And I think I've answered the VAT element too. So the tax promise, the way it works is that after you've registered your business, either as a business name or limited, you go to the tax office, you fill what is called a tax update form. Once you fill it, they send an email to you. Then you can now start knowing how to navigate it. But as I said, you need fundamental knowledge of accounting and tax to be able to fill in the right inputs so you don't put your business in trouble. That is all I have to say.
Thank you very much, Mr. Denny. I think we have a lot of questions, but you can see that the email address of Mr. Denny and that of Barrister Tabitha is being displayed on the screen. So I would not be taking all of the questions. I would only be taking.
I think we should drop our numbers too, if possible. If they can. I
Yes,
don't
okay,
know.
okay. They'll drop
What
the
do you think?
numbers
I think we
as
can
well.
drop it.
Okay. Okay. And you can also reach out to them on LinkedIn. On LinkedIn, you can drop the LinkedIn profile and you can ask your question. So I will just ask somebody says, can EFCC investigate a company based on tax matters?
Let Madam answer that. But to me, what? Let me chip in something. The FCC, in tax matters, there are so many. There are layers to tax issues. For instance, we have debt review. What we call the debt review. Once you submitted, after you filed, and they check at their back end, and they are not comfortable with what you've submitted, the FRS can send the FRS can send a mail to you from the office. They won't come to you. Okay, my capital limited. Can you explain so? Can you provide supporting document for your this so item? All that is done at your from your and you now go to the office to provide them evidence, and at the end of the day you resolve with them and you move. A level above that is what they call tax audits. So I always tell my clients, if you get a mail or a
Assessment
message
letter.
from the letter, if you get two letters from the Inland Revenue for your company at the same time, you get a debt review and a tax audit. I will advise you go for the tax audit because it's like dying once. You will die. You die once. But if you go for debt review and you finish that one, you still do tax audit because in the hierarchy of taxation, tax audit is higher than debt review. So if you are giving a letter, it is the best thing for you to both letter is better for you to do so that they will come check their books, finalize everything, and you are done for that period. Anything above the debt review, the tax audit is called tax investigation. That one is not bad. It's usually it's not for small boys like us. It is usually instituted from Abuja, either from the office of the chairman of the FRS at the top level, and you must be doing transactions worth billions of naira. So for them to say they want to investigate you, so that's just to add to what so for EFCC to come in, it's neither here nor there. But maybe we can get the legal perspective from Barrister Tabitha and Barrister Bless.
Okay. Mr. Denny is right. Usually okay, well, for tax matters, there is like a channel, like you said, tax audits, tax review, tax audits, then tax investigation. But generally, by law, the Economic and Financial Crimes Commission, they are empowered to still in a way look at those areas. For example, someone who is laundering money, the tax person is saying, oh, these guys, they are suspecting funny transaction, they're suspecting that these taxes are not paid, they're not suspecting, the stemming from the fact that the company is not remitting, right, or the company is suspected of fraud. In line with the FIRS, they can work in line. Then another thing is tax evasion. If FIRS feels like, oh, these guys would need help, would need, would need a collaborative effort from the two regulatory bodies to be able to get these guys to remit the taxes, because they have been evading, they have been, they have been moving in a way that has been allowing them escape paying and remitting, or enforcement of those taxes payable. So in that way, yes, EFCC would be able to, in collaboration with FIRS.
Okay, thank you very much. I think that is clear enough.
Yes, but let
Ultimately,
me add, please.
okay.
They do not have the primary function, but let's always add that these regulatory bodies can collaborate when they feel, oh, come up and help us. But the primary function, up until all the ways you can resolve tax disputes, it doesn't lie primarily with EFCC. Please let that be
All
clear.
right, thank you very much. I think that's clear. I was going to say that. So,
May we not
ultimately, it's
enter
the
their trap?
FIRS and the
Amen.
So, yes, that's clear enough. So, someone is asking, should VAT be applied? I think this is a very important question. Should VAT be applied to the whole invoice, or should one include a service charge and charge VAT on the service charge? Mr.
It depends
Denny.
on the nature. It depends on the nature of transaction. So you have to
Okay.
study the transaction before ensuring. Because for instance, if you I don't see the reason why you should apply VAT on a transaction that you know is a reimbursable. For instance, Barrister Tabitha sent my company. He gave us an engagement to execute something in a transaction in Abuja, and we told Madam Tabitha that, okay, for this engagement, you have to pay us 100,000, but the transportation to get to Abuja from Lagos is 50,000. Ideally, I'm not so far I can provide evidence for the transportation. You don't have to charge VAT from the transportation cost, because it's more or less like a reimbursable. You only charge transportation on the service fee, which is 100,000. You get what I'm trying to say? So it depends on the nature of the transaction. So you have to look at the transaction holistically before taking a decision out of that on such transaction. Because there are some clients will tell you that, okay, don't worry, any expense you incur. Because I trained with guys, okay, let me use a personal experience. I trained with Ernst and Young, which is one of the big four firms. And I remember when I was there, the client don't usually pay us. They don't pay, apart from the audit fee. They don't pay we consultants. So if I want to go to Abuja, for instance, from Lagos to do audit, or to go to Slum BJ in Port Harcourt to do audit, all I just need to do is just book the ticket. I can use my money, book the ticket, pay for it, and when I get to the client office, I'll just submit it, attach it with my timesheet, send it to the office, and they will pay me back my money. So if Ernst and Young wants to bill Slum BJ, for instance, they will only bill them for the audit fee, and they will not add the other transport expenses. Maybe I went to Abuja during the course of the year. I went to Abuja 3 times. My senior manager went there, partners went there. They will add it. They will only charge VAT on the audit fee, not the reimbursables, because the company is not really making money on the reimbursables. They are making money on the service fee itself. Hope you understand what I'm saying. So that's it. So you can
Thank
charge
you.
VAT on service charge too. It's valuable.
Service charge.
The service,
Okay.
yes, the constitution paid for the work we've done. So you can charge VAT
Oh,
on it. Depends on the nature of the transaction.
transaction.
Okay. Thank you very much, Mr. Denny. I think that's clear enough. Depends on the transaction that you're doing. So someone is asking here, for people doing government contracts, that the tax at source before payment. Okay, I mean, well, I think the person is trying to say the tax is deducted at source before payment. How do you reconcile such tax?
It's very simple. Once they deduct it, okay, let me use our firm as an example. We work with government agencies, and they deduct our money at source. Ours is a business thing. Once after deducting, they send us evidence. It's even automated. So once they pay it from their end, I will get it. And so. Once they get it, at the end of the year or at the end of a particular period, we write them, telling them to write a letter for us. So we use it to offset our own tax liability. On
Okay.
their, it has to be written on their own letterhead.
Okay.
That okay, we've done some transaction with so person, and this is the list of the transaction for this period. And although we have the list of transactions, just for them to validate it and send it to the tax authority, and we reconcile, and it ends there. So it all boils down to record keeping. So it's not
Records.
something difficult. Once they deduct your money, just keep evidence and follow up so that money doesn't go like that. You can use it to offset your own tax liability, especially as the owner of the business. You can use it to
Thank
reduce your
thank you very much, sir. I think that's
yes,
clear
if you
enough.
run a business like that.
Um, okay, yeah. Thank you very much, sir. Barrister Tabita, there's a question here. I think you can help us with this. He says, for those, okay, so also, what about those who convert from business name to limited liability company? Where does the company tax start reading from? Is it from when the BN or from when the company got registered?
This is a very good question. Oh. Okay, so there's usually this confusion when people um, upgrade their business names to their companies. Let's put it here. If you upgrade your business name to your company, your business name is deemed abandoned. Honestly, legally, it ought to be that it ceases to exist, but we find out that the CAC platform does not actually close up the business name. I think that is still something that they need to work on, because ordinarily, when you upgrade from a business name, um, you know, the all that you've done as a business name would not apply when you operate to a company. So if you own a business name, you have been doing business for a long time, you cannot say you want to pay company income tax when the business was still a business name. The only time the tax laws will start to apply company income taxes is when you upgrade to a company, right? Yes. So when you upgrade to a company, the date of incorporation after that upgrade, you can, like Mr. Adeni said, you indicate when you have commenced business or when you upgraded to that company, and then take it from there. So at the point after incorporation and you register with the tax office using the new tax identification, please, Mr. Adeni, I will be guided on this because I'm moving into your terrain. Let's be sure. Yes.
You are on track. You are on track.
Okay. All right. So
All
yes.
right. Thank you
Uh,
very much, Barrister Tabita. I think that's clear. So someone is asking, he says, how do we get the tax filing going as a new business or company? Mr. Denny.
yeah. The tax. Yeah, you want to get the tax filing going. The first thing you do is look at your bank statement, your records, you get your records intact because you can't detach tax filing from record keeping because you can't file in isolation. It is from your record you know what VAT to pay, what withholding to remit, what to do. So you have to keep your so like I always say, let professionals handle it for you. And if you can't afford a professional, you can book a one-on-one session. You can book a one-on-one session with a professional that will guide you on what to be, and that professional will put you on an autopilot on what to be doing. So by the time you see that, it's like I need a guidance. You can call on the professional to guide you. So that's the advice I usually give people. So that if your business is still young, you still need a professional. But you can book a one-on-one that will guide you. Maybe the professional can give you templates that will guide you. Maybe templates in preparing your staff salaries, how to calculate VAT, all those things, so that you can at least for some time you can run on your own. And but there are some things you can't do by yourself. For instance, you can't prepare and audited your account by yourself. If you run a limited liability, you have to come to a chartered accountant, a licensed auditor, and I'm a licensed auditor. I have ICANN license. So you have to sign on. An auditor that can sign off on an account. So because without that, the FRS will not accept it.
Accept
So
it. Yes.
there are some aspects you can handle on your own, like the filing. You can do it yourself if you have the competence. You can also do that. You can always do that yourself. But I always tell my people, seek professional guidance.
I think thank you very much, Mr. Denny. That being said, I would like to also add that if you need to if you need further engagement, you need to further engage these people. The email address of Barrister Tabitha and Mr. Denny will be displayed on the screen, so you can contact them further. And also, they have like retainer services. I think I'm right, Mr. Denny. They also have retainer
Yes,
services that you can engage them on, and you don't have to be
please.
worried about your taxes and all of tax filings and all of that. They have these people, they can help you take off that burden and help you with your taxes, housekeeping, and all of those things. So you can reach out to them on LinkedIn. You can send them an email, and also the phone numbers are there. Somebody's also asking. He says, "Please share Mr. Denny's company name, email, and phone number if possible." So all those things are on the screen, and a lot of people are commenting. They are saying, "Thank you, Mr. Denny. This has been an insightful session so far." Thank you. Yeah, I think basically, let me see if there's any question that we have not touched so far.
Oh, I
Uh,
have a question for Mr. Adeniyi.
Okay.
okay. Yes.
Yes, Mr. Adeniyi. So a lot of my clients keep asking me, if I register a company today, when do I need to register with FRS and when should I start filing?
The law says 6 months, before 6 months.
Okay.
But I always tell people, once you register, start file, if you want to incorporate, register immediately. It won't cost you anything now. Register immediately so that you don't exceed. That's what the law says.
Okay. Okay. Okay.
Okay, so I think on that note, Miss Barrister Tabitha, do you have further questions for Mr. Denny? Because we're about to wrap up.
Okay.
Um,
No, just a comment. So for I don't want people to feel like their businesses are too small for tax compliance. You can see that from the taxman's angle, they have given you the categories, but when it comes to filing, I don't think those categories are excusable when it comes to filing your tax obligations. So let's look at a business being small from the legal definition of small. Is it within this? Is it within that? And then just start filing when you need to file. If you register a company today, I think most times people now register with the tax promax. I believe that's what's actually common these
obtainable now.
days. Yes,
Yes.
the bankers will tell you go and register with tax promax, and I believe that when you register with tax promax, you need to start filing and start remitting as applicable.
Okay, thank you very much. I think we have exhausted all of the questions that we have here. Wow, what a powerful session. We've covered a lot, from understanding tax obligations to tax filing. And Mr. Dini also took his time on the financials and accounting, record keeping, and also from the legal perspective, Barrister Tabitha has also taken us through the compliance best practices. So it was such an impactful section. We want to say a huge thank you to Mr. I want to say Barrister Denny.
Yes, I'm barrister by association. A barrister Denny. Yes. Thank you very
Thank you
much
so
for
much,
the
sir.
honors. I accept it.
I'm accepting it.
Thank you
Valid.
so much. There are lots of comments there are a lot of comments. People are saying they've learned a lot, and they say thanks for the insights from this tea education. Yeah, thank you for highlighting that. This one comment. So thank you so much, Mr. Denny. Thank you, Barrister Tabitha, for sharing your expertise. We really, really, really appreciate it. So before we wrap up, if you found this session valuable, be sure to follow our speakers. I think Mr. Denny, the name is, if you search Mr. Denny
Bamboy.
Bamboy on
Ramboye.
LinkedIn, right?
Yeah.
Am I correct, sir? I think
Yes, yeah, yes, Ramboye Adeni, yes.
yes, yes. So if you search him on LinkedIn, you would see him, and you can follow him and ask him any questions, and he would guide you, put you through. And also, same thing goes for Barista Tabitha. She's Tabitha Wakeme on LinkedIn, so
She
you can
owns,
follow her.
she owns Instagram.
Ah.
Yes, so you can also follow T Corporate Legal Advisory on Instagram. You know, some of these things that we have talked about, they have these free sessions on Instagram, on LinkedIn. I see Mr. Denny sharing tips on LinkedIn, free tips, so that you can learn from. So follow them, and you even learn even much more for free. And also, someone asked earlier if this session was recorded. I think Barista Tabitha,
It's yes, yes.
it is recorded, and if you want to revisit this, you can. It's a paid session, I think, right?
Yes. Yes.
So yeah, so you can find out further details from Barista Tabitha on that. So if you have more questions, like I said, you can connect with them and ask them after the session. So thank you so much for joining in. Thank you, everyone. We really appreciate, and for staying up until this time. Thank you so much. I think it's over 2 hours now. So thank you, and have a great evening. Stay
To drink
compliant.
water.
Yes.
Thank you.
All right. Thank
Uh,
you.